Elliot Jolish has been a business coach specializing in leadership development, strategic planning, marketing, and process improvement for the past 5 years. He has invested over 30 years helping to resolve customers' technology problems through technology development, implementation, operations management, and customer service. With that expertise, knowledge, and experience, Elliot started the ECJ Group, LLC, and recently the Jolish Group, LLC, to help individuals and businesses with coaching, marketing, and facilitation. Elliot's experiences include his own entrepreneur experiences and working with both small groups and large companies to find answers and resolve problems. Please welcome Elliot to our Friday BGN.
Well, good afternoon, everybody, and I've been told I have a very tight area to work in, and that's very unusual for me since I like to walk around. So if you see me moving with my hands, you'll understand a little bit. I'm going to make one correction, no fault of his own. I should have said something. It's Jolish, actually, instead of Jolish.
Oh, thank you.
Everybody wants to put a short O on it, or a long O on it, and it's a short O.
There you go.
But other than that, as I said, I usually answer to anything. So,
Don't call me late for dinner.
Exactly. Don't call me late for dinner. So, and I was noticing when you read my little bio, and I got to go back and remind myself to change it. It's actually now I'm in my 7th year of business here.
There you go.
So time flies when you're having so much fun. Absolutely. And I'm having a blast. But anyway, the biggest problem I've had in getting this presentation ready is that I've been traveling for the last two and a half weeks. And it was a little more challenging than I expected it to be. But that being said, let me give you a brief background of who I am, because that's one of the slides I forgot to include, of course, is my background, which he described. I started in accounting way back when, we won't say how far long ago. Decided I was not a big fan of accounting, though I understand it and worked for an accounting firm for a couple of years. Moved into photography, which was my passion. And from photography ended up in IT, and I spent 35 years in IT. I left IT in 2009, involuntarily, as a lot of us did, and found myself basically in that kind of time frame and age frame and level of accomplishments frame that I wanted to do something different. And so I opened up my own coaching practice in 2011, and I've never looked back. And I keep adding to my tool bag of things that I've got and what I want to do. And so I offer myself up as a marketing specialist, as well as a specialist in communications and process improvement and leadership. So that being said, one of the areas that I always have come in, I do a lot of goal planning with companies. Obviously, there are a lot of other people in the room that do goal planning. One of the things that had come up when I talked to Dave and a few other people in the group over the last, I think we had this planned about 3 months ago, is what else can we talk about? Well, everybody, or I should say a lot of small businesses, don't like talking about the inevitable financial plans. What do you do with your balance sheet? Do you even have a balance sheet? I deal with some solo entrepreneurs. They're a mom and pop type thing, or it may be just dad only, or just maybe a sole entrepreneur of some type. And I always ask to see their financials, and they either don't have them, or they're 6 months behind, and they only get them together just in time to get their taxes filed the previous year, or for the next year. So I said, well, let's go back and tell people about the importance of what financials will do for you. If I was here back in February, I talked about the different 5 steps and how making minor differences in those 5 steps can explode your business. Well, the same thing works with financials. And I forgot my clicker, so I'll have to click this way. So I always like to tell people what we're going to discuss. This is a longer presentation. I will not have time to go through every step in here. I'll be more than happy to sit down and talk with anybody. There'll be contact information at the end of the presentation as to how you get a hold of me, and we'll sit down. And as I always say, for any client, there's no, or prospect, there's no cost for the first meeting. So why should you care about business finance? So, and the thing to recognize is that when you look at a balance sheet or a P&L, there's your look at it as the owner of your business, and then assuming you have a CPA or an accountant, and I'm getting out of my field of view here, there's the way they look at it. They're looking at it from a tax perspective. You're looking at it as, what does it mean for my business? So we're gonna kind of brush over the basics, because that's about all the time I have for the profit and loss statement and the balance sheet. And I'm gonna primarily concentrate on the profit and loss statement and what it means and why it's important to understand. So all small business owners want more clients and more revenue, right? I've never met a business owner that doesn't. And the first time I do, I figure, well, they don't need me. And there are people that don't need a coach. Very few, less than 1% maybe. And if I sat down and talked with them long enough, I would probably say they could use a coach too, and I could show them how. So what does it take? So the real question is, what does it take to produce more clients, and how do you figure that out? So first, you must generate leads, and you must convert those leads into clients. And by understanding your financials, you can make the necessary course corrections during the year to improve your bottom line. So from a client standpoint, from a business owner standpoint, if you don't have financials on a monthly basis, and if you're doing enough business, I'd even say on a weekly basis to understand what you've done, you're missing the boat. You can't. If you've got a big ship, it takes a lot of time to change the ship and see changes. When I start working with any new client, I tell them, give me 90 days. 30 days to figure out what's wrong. 30 days to make the changes. 30 days to see effective changes. It doesn't mean we get it all right the first time. A lot of times we will. A lot of times as we start going down that path, we'll veer off because we see something different. So it's very important to have financials at least on a monthly basis. If on the other hand you have 10 clients a year and each client is paying you $50,000, okay, you might be able to get away on a quarterly basis. Because assuming you have no costs and your overhead is nominal, but we're going to talk all about that as we move forward. So your financials are a scorecard. It highlights what's working and what isn't working. It shows you things you can't see in your own business. If you're working in the business, you're not working on the business. And most small entrepreneurs are working in the business. I have to pull them back out and say you need to step outside the business and take a look and see what other people see. Until you understand how that works, you can't make changes. And you can't see how those changes are going to be effective. So one of the other things the financials do is it provides a measurement and therefore allows you to control. It helps the planning process. It gives you an advantage to your competitors. If you have a competitor and you know your financials and your numbers and what your overhead is and whether you're break even or not, it gives you a huge advantage over a competitor that may not have that information, that may not be able to understand why they're not successful, or if they are successful, what they're doing right versus what you're not doing right. So I always like to say that you've got several pieces in your toolkit, or your Swiss Army knife, as I'd like to call it. You've got a profit and loss statement. You've got a balance sheet. Everybody knows what those are, I hope. But here's some more. Statement of cash flow. Does everybody know what a statement of cash flow is and what it means? You've got an operating budget. There are key ratios, and there's trend analysis that you pull from all that information. Now, because of the shortness of the presentation here, we're going to talk basically about just the P&L. It's about all the time that I've allotted for it because there's a lot of depth into it. The second most important on here probably would be the statement of cash flow. I would have to say it's probably for another time. If we get a little time, I don't have slides for it, but if we have a little more time, I'll get into it a little bit. But what the statement of cash flow basically tells me when I look at it, if I ask a small business owner, do you have a cash flow statement? 95% of the time they say, what's that? Or they'll say no. Sometimes they'll say yes, not knowing what it is, and then they'll hand me a P&L. And for those of you that may or may not know what a cash flow statement, basically a cash flow statement shows how much cash is coming in and when the cash is going out. Because if you're working on an accrual basis, you may bill for something in January and not get paid for it until March. So you've got income showing on your books, but you're not getting that cash into your system until March. That's okay as long as you allocate for that, as long as your expenses are controlled on that. So the profit and loss statement. The profit and loss statement shows the financial performance of a business over a specific period of time. And as I said, that can be a week, a month, a quarter, any time frame you want to design. I also like to suggest that you use it as comparative. You go back to your previous year, look at this year versus last year. That'll tell you if you're growing your business or not. Now maybe you don't want to grow your business. That'll show you if you're static. Worst thing they can do, or the best thing you can do, is also show you if you're not increasing. Maybe your costs have gone up and you haven't recognized them yet. This will help identify that problem. So let's look at a typical, very basic, very simplistic P&L. The very top line, and I didn't realize it until I got it on the big screen that it's hard to read probably. There's $100,000 at the very top, and it should have been in black, but it's because it's highlighted, I think it's not. But let's say you made $100,000 in revenue. It doesn't matter what time frame. It can be a week, it can be a month, it can be a quarter, it can be the year. Your cost of sales are $60,000. The cost of sales are calculated as these for whatever your revenue is. The cost of sales are directly related to your revenue. So if you have zero revenue, you should have zero cost of sales. So your cost of sales will be if you carry inventory, what it costs to purchase that inventory. But not just purchase that in, let's say you manufacture something. That gets a little more complicated, but it's the same situation. It's what it costs to manufacture those pieces, including all the raw materials, all the electricity that might be used to make those raw materials or to put those raw materials together. Labor, absolutely. Labor can actually fall into two categories. It can fall under cost of sales and also can fall under fixed costs. If you have a manager, you have a bookkeeper, you have HR department, those generally will fall under fixed costs. Because whether you have any sales or not, you still need those people. Sales department, same way. But if you're manufacturing something, your staff that manufactures that parts could fall under your cost of goods sold. So your cost of sales are variable costs. It'd be your inventory. It would be, as I said, you have to go through and really analyze every expense you've got and figure out where it goes. Which column does it go into? Does it go in the cost of sales? And the real question to ask is, where is this expense coming in from? Is this expense derived from the fact that I'm selling something, or is it going to happen whether I sell zero or not? If the answer is yes, it's from the cost of selling something, then it goes in cost of goods sold. It gets a little challenging because occasionally you'll have variable costs. Electricity a lot of times can be a variable cost. It'll fit into both categories, and then you have to figure out how do I break it out. That gives you a gross profit. In this case of $100,000, we've got $60,000 cost of sales. The gross profit's $40,000. That $40,000 pays the bills. So our fixed costs are $20,000. Our net income after all that, you take the 40, your fixed costs are the 20, you end up with 20,000, and your net income percentage of sales is 20%, at least in theory, until you kind of peel away the onion, as I like to say, and really dig deep into that and see, is that really what's happening? Or there's always, as I've always go through and sit down with somebody's financials, there's always those hidden costs that they forget to put in there. Or sometimes there's those hidden costs that they put in there that aren't meant to be in there. I find that extremely true with a sole entrepreneur. If you're running your business as a sole entrepreneur, the number one thing I have found that people forget to do. Anybody get an idea of what that might be?
Tax.
That's one, but that's not the primary one. They always think, they're always saying that they have taxes to pay. They know that. They sometimes forget about the Social Security piece of the tax since they're self-employed. But the number one thing that they forget to do is pay themselves. They say, oh yeah, well, I'll take whatever's left over. It doesn't work that way. Yes, in the bigger picture, sure it does. But if you're running a business, then run the business and pay yourself, because you're cheating yourself. it also means that you cannot truly arrive at a true revenue cost. If I have a widget I'm selling for $1 a piece, and I sell 60,000 widgets, or 100,000 widgets, which would be $100,000, and those widgets cost me 60 cents a piece, okay? I got to figure out where's that how is that 60 cents coming out, and where's my salary come out? If I'm waiting for the bottom line, is that what I want to live off of? By paying myself, that gives me a true better bottom line. Because you also, assuming that the company's paying for health benefits and any other benefits, that's got to come out. And then again, the other thing is, if you've got payroll, there's taxes to consider. All that has to be calculated. So you can't be afraid to adjust pricing as necessary. Obviously, and unless you're selling widgets or, ballpoint pens or something that are a commodity item, you make sure that whatever you're creating for your client, for your customer, that you're offering a value to it, because the value is what will sell your product. So the gross profit percentage, it's a measure of your overall operational efficiency. It doesn't usually show big swings, but trends are critical. And we'll get into an example of where you compare from one quarter to the next, and you'll notice a shift. And then the question is, why did it shift? Now, the first few quarters you do that, or even the first few months you might do that if you go on a monthly basis, you may not know the answers to that until you kind of sit back. One of the challenges I have with clients is I always go in and ask them, when's the last time you reviewed all your expenses? And the favorite answer is, I never have. It's not the best answer, it's usually. And every now and then I'll get somebody as I review them every year. That's better than not at all, but not often enough. I usually tell people every quarter, 3 to 4 months is about the time frame. Because if you start a project and you subscribe to something, and let's face it, we all get bombarded with internet marketing or with new ways of doing something, and we get up there and we say, I'll try this out and see if it works. And 3 years later, you go back and says, why am I paying this $50 a month? What's this for? Something that you started working with, didn't work, quit it, but you never canceled it. I was talking to a company about 3 months ago, and we asked them, they had a radio advertising contract. And it was, $10,000, $15,000 a year. And they didn't realize it until we went back and read the agreement that it was a monthly payment and it was cancelable. All they had to do was cancel it. And they'd been running at 8 months when they didn't need it. They had 8 months extra in it that they could have saved all that money just by not going back and reviewing and determining after a 3 or 4 month period, is this really something we need? So I always challenge companies and business owners to go back and look at their payments, look at what they're paying, making sure the structure's right. You might find an error either in either favor. It doesn't matter. The fact that you found the error, you can correct it. It now gives you a more accurate approach to your overall business. So again, small changes can have big impacts, and a great way to understand why you're working so many hours and still have trouble paying the rent. So here is an example. The gross profits percentage of sales, and your fixed costs. That's your overhead. That's whether I show up to work every day or not. It's the cost of my building potentially. It's the cost of electricity to turn the lights on, not to maybe run the machinery, but to turn the lights on. If I have staff that I bring in, like a bookkeeper, that all comes under your fixed cost and your overhead. It gets challenging because there's actually another category I could put in there, as I said, variable costs, which would split between the two. And then it gets a little challenging is, how do you report that? Do you report it 2 separate columns? Do you report it as one? You also have to look at different things. Let's say you have travel costs. So where do your travel costs come in? Well, if they're travel costs for your management side, that comes under fixed costs potentially. But if you've got salespeople that are on the road, their travel costs potentially would come under a variable cost factor. So again, as I said, fixed costs are the costs you incur regardless of whether you make a sale. May not be actually fixed, as I said. Let's face it, electric bill really is not a fixed cost because it depends on how much electricity you use. And it's funny, when if you really want to get an idea, if you have an office space and you're paying your electric bill and you turn the power off there for a month, it's funny how there's still something trickling somewhere that you forget. And we've all been spoiled. Let's face it, we've all been spoiled with instant on, right? You go in, you flip a switch. Well, what you forget to know, and sometimes it's essential to have that instant on. But we're still paying electricity because even when it's off, it's not really off. There's a trickle coming into it. That's a chargeable item that you may forget about. Now the question is, do I really need it? Do I need that instant on, and is it worth the savings? There's no way to track that. There are some places on the web now you can go out and put in your rates and stuff, and it will tell you based on what you're talking about. Because in fact, whether there's a savings and what kind of savings.
They have tools you can actually plug into the
And
outlet,
right.
If you measure that constant.
That's true. Depends on sometimes who the energy company, the
Right.
energy provider is too. So again, they don't change with sales volume. So example, rent, insurance, office salaries, utilities, the CEO's club dues and bar bill. Not so much anymore. The advertising, maintenance, and repairs. I got to throw that in as a little dig sometimes. I mean, nobody ever here goes to the country club and writes it off, right?
Or the bar.
Or the bar. Yeah. Well, it is a valid expense in very certain cases. I agree with you. So the bottom line, as I said, that's your net income. But if you haven't taken salary out to pay yourself, who are you cheating? Who are you losing money from? It's not a true number. So what else can the P&L tell us? And as I would say, it's lots as it turns out. So here's an example. Here's period 1 and period 2. I'm going to make an assumption that we'll say this is a quarter, just for talking purposes. So in my first quarter, I had $100,000. In the second quarter, I had $125,000. Hey, I had a great quarter. My cost of sales, though, are 60 here and 80 here. Okay, is that right? My gross profit only went up $5,000. Does that seem right? My gross profit here is 40%. What's my gross profit over here? Is this good or bad? We don't have enough information yet. We have to do some calculations. My first question is, my sales went up 25%, but my cost of sales, which were 60%, went up to 64%. Where's that 4%? These are indications right now that we have something to look at to figure out why did my cost of sales go up 4%? Because one of the theories would be that in a market where my expenses, where my sales go up, my cost of sales in theory are going to stay the same or go down.
Right.
And if they're going up, then something's leaking. And it's you got to figure out where the leak is. And I'm going to step out of here just for a second.
Oftentimes it can be employee overhead to produce the overtime to produce the extra sales.
Well, and one of the questions that I would come back on is, why am I having overtime?
Right.
Is there a production somewhere in the line that's not working?
Right.
An example that I've got from a coaching friend from years ago. Actually, this is pre-recession days. It goes back into the early 2000s. He was working with a manufacturer, and this manufacturer kept having tolerance issues. So what they were selling, and in this case it was concrete barricades, and they were out of tolerance by a small percentage, to the fact that it's too cost prohibitive to re-pour them. So they had to grind them to make them into tolerance. But that's costing them extra labor, that cost them overtime. They ended up losing money on the job. because of the tolerance. Now, where's the problem? Well, the problem was when they poured it, somebody didn't make the correct measurements or something, and didn't check it immediately afterwards. You know, you don't, if you're building something new, my thought process from we'll call them widgets again, widget standpoint is you build a widget once or twice to make sure it works and that it's in tolerance before you build 100,000 widgets only to find out that after you built them all, you got to throw them away. That's just common sense that a lot of small business owners don't have sometimes. I didn't say that out loud, did I? So I'm going to switch gears slightly here because this is also part of the information you get out of the P&L. And that's the most important piece that from a small business owner should be the break-even point. This is why I say it's very important that you pay yourself as part of the business and not just wait for the end result. Because it is very important. And I'll tell you right now, I'm talking to most business owners, they don't know this number. They do not. They don't recognize the importance of what your break-even point is. The break-even point is basically that you generate enough profit to pay the bills. And that's not just the variable, that's the fixed cost, that's everything. That's why you pay yourself out of your fixed costs, because whether you sell something or not, you're still there. So as a result, the business neither makes or loses money. So by paying yourself, now you've got your money, your salary comes out of the business, then you've got a bottom line at zero. Now when you start making a profit, what do you do with those profits? You can roll those back into the business to grow the business more, and you can pay yourself more money, you can pay your staff more money. There's a lot of different options, but if you don't know that break-even point, you're guessing.
It also determines that if you don't know your break-even, you don't know how much profit you can.
That is absolutely true. You really don't have your profit
what
number.
your profit is if you don't know the break-even.
So this is where I was going to end a little bit. We got about 6 minutes left.
Yep.
So I was going to leave it open to some questions that people might have, or there's so many more things. One of the things I didn't really get into touch with was the cash flow. The purpose of cash flow is to be able to manage your money. You know, how many times do you wake up in the morning? I talk to businesses, and the first thing they do every morning is they look at their bank statement. There's money in their bank statement. Guess what? I'm doing okay. I got money in the bank statement. You know, it doesn't work that way, unfortunately. It'd be nice. I want to see lots of money in the bank statement so that I don't have to worry about it. So that goes back to how do you get your clients? How many? You know, the numbers are the most important part of running your own business. What I tell everybody, and it's not just from the financial standpoint. It's from the standpoint of recognizing how many people I reach out for prospects. How do I get my prospects? What conversion rate I have for my prospects? You know, I ask, and I'm sure everybody here, other coaches here, you'll go in and you ask a client, who's your ideal client? Oh, I can sell to everybody. No, you can't. And if you can, you're not doing it right. Because if you could sell to everybody, okay, McDonald's can sell to everybody, maybe. And I would have said that I haven't been to McDonald's in over a year, but that's not true anymore because I had breakfast there last week. But anyway, only because they were the only place open at 6 a.m. in the morning on a Sunday in Indianapolis. But anyway, I just spent 3 weeks with a client between Syracuse, San Antonio, and Indianapolis. So, and long hours and so help my bottom line, but it's going to help his bottom line too. So the importance of knowing the break-even point, the importance of understanding your financials on a regular basis, and then measuring that from a cash flow standpoint so that you know what cash is going in and what cash is going out. And that will help you over any period of time, whether it be quarterly or annually or whatever, improve your numbers, figure out, am I profitable? And if not, what do I need to do to make myself profitable? It'll help you highlight errors faster. And again, if you remember the program I had back in February that some others have mentioned here, the 5 steps, of building your growth by adding more prospects, i.e. more clients at the end, will help you become a better business owner and be more profitable.
I think it's important to understand that the profit and loss is history. The cash flow is future.
Is future. That is correct. That's a very good point.
And
Yeah.
if you don't know what the past is, there's not a good enough way to forecast
The future.
the future if you do not have a cash flow statement and an understanding. I tell clients we need to look at least 12 weeks.
Right.
forward.
Yeah, that's a quarter. Yeah, that's a good point. And the sad part, I've talked to a lot of clients that will put money into their business because of fluctuations in the way their business runs, and I keep telling them, get your financials in order, get a cash flow so we see what we need. Then you can go to the bank, you get a working capital loan, and use their money, not your own. But the problem you run into occasionally is that you're a small business, and banks, like, unfortunately, believe in history, not in the future. So they want to see what you've done last year or the last 12 months. They don't. So it's one of those issues you have to deal with. So here's my contact information if anybody wants to reach out. Check my website out at Jolish Group. I actually have two. There's Jolish Group and the ECJ Group. And I've got a couple of upcoming events I wanted to tell everybody about real quick. Like on January 9th, I don't have any flyers out yet for it. It'll be on my website here probably next week. I'm still catching up from the 3 weeks I was gone. I'm doing a focus group. It's going to be limited to 20 businesses. There will be exclusivity, so one business only in your whatever your business is. It's going to be held at the Frisco Chamber office, which is over on Main Street in Frisco. If anybody's interested, you can reach out to me at my email address or give me a call. I'm also putting together a mastermind group. There'll be monthly meetings starting in January. I'm still working the structure out as to what it is. For anybody that's seen the video here or was here at the meeting, there's an extra discount because I'm going to offer it at Cyber Monday. But I'll give you an extra discount if you just tell me you were at this meeting or you saw the video. So, any other questions?
Questions?
For example, some of these numbers, they seem really boring, especially hearing them rattle it off. Like, no offense to you, it's just they're numbers, right?
They're
it's
numbers.
the boring part of the business. I was sitting with somebody yesterday, and he had calculated the lifetime cost. So he broke those numbers down, not just by date, but by type of customer. He has 3 different types. One has a lifetime value cost of $100,000. One has a lifetime cost of $300,000, and they both cost the same to acquire. So which one do you want to go
Lifetime
after?
cost or lifetime profit?
Lifetime profit.
Okay.
Sorry.
Profit, yeah.
But lifetime cost is the same.
Same,
Right.
right.
For both. One goes negative, one doesn't.
Right.
Well, and one of my favorite things when I sit down and talk to a client, depending on what business it is, I always ask them is, when's the last time you raised your prices? And they're so fearful.
Right, I can't do that, we'll lose business.
Exactly. And I can show them in a matter of 5 minutes that in generalities they won't.
Right. Agreed.
You know, they have to lose so many more, and people just won't walk away for just that reason. And as I've always saying, which would you rather have? Would you rather have one client at $5,000 a month or 10 clients at $500 a month? It's the same thing. But I know which client I'd rather have.
Right, me too.
So
How sophisticated does your accounting system or accounting record keeping have to be?
depends on the business itself. Not very. I mean, at least to start with. If you're a sole entrepreneur, you can actually do it on paper.
Source spreadsheet.
You know, or on a spreadsheet, yeah. Somewhere along the line, for tracking purposes, I highly recommend it moving into some type of electronic accounting system, whether it be QuickBooks or there's 2 or 3 others online that work. That would be fine. As full disclosure, I use QuickBooks Online for some of my clients, and I am a pro advisor with QuickBooks Online.
I have a question on that note. How do you go from cash to accrual? The easiest.
The easiest.
With QuickBooks.
With QuickBooks, actually with QuickBooks it's simple because they actually have a switch that you just flip back and forth when you print your reports out. You create an accounts payable or accounts receivable, because you got to do it on both sides.
So then you have to input all your receivables. So if you're not doing receivables through QuickBooks,
Well, yes, then you can't do it that way. I mean, then you do it by hand, but now here's the other issue. If you're a sole entrepreneur and you file a Schedule C through the IRS, you're cash, no matter what.
You're going to do it on cash.
You're going to do it in cash basis anyway. If you're a true LLC, I do highly recommend at certain levels, you can talk to your CPA about it, you convert over to at least a sub S, if you're profitable enough.
Right.
well, I think you have to at a certain point. The government requires it. I think it's 2 million.
Yeah, well, when you get that high, yes, but I would have suggested even higher than, well, if you're earlier than that, if you're making that kind of money, you need to be in a sub S, because you're paying way too much in taxes if you're a
Personal
C.
taxes
Yeah.
instead of corporate tax. Elliot, thank you.
Thanks
You're
a lot.
welcome. Thank you.
If you start telling people who your people are, they'll start telling you who to find. If I said to you, how can I support you? And you said, my clients are everyone, my curtain goes down. I can't see everyone. But if you said to me, my clients are entrepreneurs and in the age bracket of 40 to 60, and I work generally with